Good morning, ARMR Insiders. Welcome to the morning meeting of the virtual hedge fund we call ARMR Investing Way. Thanks for joining. Appreciate your time this morning getting ourselves ready. You're the portfolio manager on the desk. I'm going to share big picture stock market, how we changed our portfolio yesterday based on that major reversal day, what it means for the rest of this week. We'll go over our day trading, swing trading, and investing strategies. And at the end of the day, you have to figure out your own risk tolerance and your goals and then execute that. So be the smart money. Okay. A couple things happened yesterday. We had this gap up on another beat, blowout, raise guidance type of thing from NVIDIA. And really, we knew right then the market's going to hang in the balance. It's either going to go, it's going to gap and go, and we're in the midst of a significant wave 3 uptrend, or we're going to put in a double top up here. We don't know what it's going to be yet. Yesterday was a step towards a double top. So let's just take a big picture look at the market. Okay, this is the highlighted stock of the day. It's going to be the S&P. Risk monitor green here starts the first leg up, which was awesome. Pull back here creates the second wave down to test the 50-day. We get the risk on green in here, runs up, and then we have this kind of ugly reversal day. So how do you want to go about it? Do you want to go the negatives first and the positives? Do you want to go positives first? Let's do negatives first, and we'll end with the positive. Big reversal day. Gap up, reverse, close down. We haven't seen that type of action in a while. I'm going to take you to the day trading charts of the S&P and the NASDAQ. I shared with you while we were doing it at 1242 that was the entry point to be short if you wanted to, and that the market's going to go lower. It's a textbook setup. So we're going to get to that in a minute. You could print it up, put it above your trading station. So whenever you see that setup, you'll know the market's going lower. It's remarkable. We'll go over that in a minute. So bulls versus bears. The bears won yesterday. That reaction was decidedly bearish. What disturbed me the most is that the selling was in every asset class across the board. That was disturbing to me. The only animal that could create that kind of selling is institutional stampeding to get out of risk assets. What was strange, though, it was literally out of every asset. Gold, silver, copper, energy, crushed, Bitcoin, down. It didn't make a difference. The S&P, big cap, small cap, mid cap, everything got trashed. When we see that happen on every asset, you got to take a step back. You got to say, wait a minute, what's my allocation? What's my risk? What's my cash position? Now, if it turns out to be nothing and it's just a consolidation, the market reverses and goes higher, hey, man, I can't wait to put money back to work. We'll get to that in a minute. But confluence is king. And when every asset goes down at the exact same time, I mean every asset, bonds, corporate bonds, government bonds, it didn't make a difference. Now, some people will say to you, well, that's because there was an economic number that came out. And Jamie Dimon's talking about, rate hikes this year, not rate cuts. That story is always out there all the way up. Look at the uptrend all the way up. Oh, the economy's overheating. Oh, the economy's grinding higher. Inflation, blah, blah, blah. Market keeps going up. So that's not the reason for the market to go down. It could create daily volatility, but if yesterday begins a slide in the market, there's something else going on. Now let's flip to the positive side. One day doesn't mean anything in an uptrend. You can have one-day reversals all the time. Market can go into a sideways correction. Doesn't have to sell off aggressively. We might not get to risk monitor red. Here's what happened the last time. We had a big reversal day like this yellow box here. 7 days later, the risk monitor went red. Market went below the 50. So now we have another big reversal day. It doesn't have to break down. First of all, the first stop is the 25-day moving average. The risk monitor is still green. It doesn't change because of one down day. The weekly close is more important than any one day. So if we recover today and the market's strong into the close and the weekly bar digests yesterday's action, there's nothing wrong with the market. Chances are some of my reaction to raise cash, I'm somewhere around 50% cash. I shoot first and ask questions later. When I see action like that, I raise cash. 50%, I'm protected. Okay. I run my macro fund following the risk monitor. So it's going to have investments until the risk monitor goes red. I run my investing portfolio, investing/dividends. We haven't touched that portfolio because we only touch it at the end of the week. It's weekly stops. So if today craters to the close, chances are we'll be raising some cash in that portfolio too. But if today stays steady, it's a quiet day, maybe we close higher, We look at the weekly bar, nothing's going to be wrong except for a volatility day after a major earnings announcement. It's possible, if that's the case, I bump up my exposure going into the weekend and I go from 50% cash to maybe 25% and I increase some index exposure because the risk monitor is green and nothing really changed. So that's the positive side of what happened yesterday. Let's just see what the next move is. Market takes out the lows of yesterday, even more defensive going into the weekend. Something's wrong. Market holds the lows of yesterday, closes higher, decent weekly bar, probably no big deal, nothing. And I suggest that you print this up and you put it above your trading station so you always remember this sell signal because it is absolute money. It's a textbook sell signal. Those of you who were on the desk with me yesterday at 12:42 on this bar, I said to you guys, this is a sell signal. If I was willing to short, I would have shorted that. I don't short a risk monitor green market. If risk monitor was red, that would have been a short. I say to you, there's an ARMR axiom. There's a step between long and short for me, and it's called cash. So I don't start shorting. I raise cash. So yesterday on that signal, it was very clear. We had to raise cash. I already raised cash earlier in the day. Then I ended up raising more cash on that signal. But take a look at this, take a screenshot, put it above your desk. This is the 3-minute chart of the S&P and the NASDAQ. And when you see this, you know it's dangerous. So first of all, look at the similarities. Talk about confluence. They're identical patterns. Let's walk through the anatomy of a murder. The market gaps up. It gaps up, immediately gives up the gap, showing you weakness. Up in here, these gray boxes are showing you that the average true range, which is dynamic for us because we've infused it with volatility, so it's an ARMR ATR, is dramatically coming down. Bang, it gets collapsed here and collapses again into the opening range. That's typically a signal that you have a 100% down day. In other words, you're not looking long anymore. You're looking to protect capital. So step one, big selling off of a gap up morning that drags the ATR down, right? Then usually you get a rally attempt. Here it is. Here's the rally attempt. These black dots are the VWAP, the ARMR VWAP, volume weighted average price. This first line up here, this yellow/cyan line, light blue line in yellow, is the first standard deviation above the VWAP. So what's going to happen on these murder days is that you gap up, give it all away immediately. So there's just serious selling. You have a rally to try to recapture. Double top at the VWAP or at the first standard deviation above the VWAP. And when it breaks back below VWAP, the aggressive selling starts. So you can see on both of these charts, it went above the VWAP, put the double top in below the first standard deviation, and then cratered. But that's why it's good to look here at the equally weighted S&P. It stops right at the VWAP. That's even weaker. It couldn't even get to the first standard deviation up. The Dow never even got to the VWAP. And small caps went right above the VWAP in reverse. That's a beautiful throw over. You break out above and you collapse back below, the selling starts. Okay? So you could print this chart up, put it above your desk. That's a classic intraday day trading sell signal. So I'll see you guys at 9:30. We'll do it together. Anybody who finds this too difficult to follow along, whatever, you're going on a trip, you got a job, you can't do it all day, give me a phone call, direct message. We can chat together and see if a relationship through Interactive Brokers makes sense. All right. You guys have a wonderful trading session. And at the end of the day, remember, be the smart.